Welcome to this explainer. Today we're jumping right into something completely wild and truly fascinating from our source material. So forget standard interest rate models or algorithmic trading for just a minute. Instead, we're looking at the theoretical architecture of Astro-Economics, specifically how it's being applied to forecast some massive structural shifts in the Indian stock market between 2026 and 2028. Now, whether you're a strict fundamentalist, a technical trader, or just kind of curious about market psychology, you have to admit the way this framework synthesizes ancient celestial cycles with modern macroeconomic trends is just incredibly detailed. Okay, let's dive right in and unpack exactly how this cosmic playbook is put together.
Here is our roadmap for today. First, what is Astro-Economics? Second, mapping planets to sectors. Third, micro-timing with moons and retrogrades. Fourth, Phase 1, Jupiter's euphoria. Fifth, Phase 2, the karmic shift. And finally, Phase 3, Saturn's great purge.
Section 1. What is Astro-Economics?
So what exactly is this discipline, and how on Earth, or rather in the heavens, is it applied to financial capital? Well, the core premise here is that the gravitational and energetic dynamics of celestial bodies literally exert a measurable influence on mass human behavior, and that altered behavior alters investor risk appetite, creating self-fulfilling cycles within capital markets. Now, the text makes it super clear this isn't meant to just replace your traditional fundamental or technical analysis. Not at all. Instead, it acts as a complementary timing mechanism. It tracks planetary orbits to pinpoint periods of intense market euphoria or extreme panic. It's almost like an extension of the classic Dow theory of repetitive market cycles, just on a cosmic scale.
To actually apply this to India, analysts look right at the Republic of India's independence chart from August 1947. This chart features a Taurus ascendant. Now, Taurus is a fixed Earth sign ruled by Venus, which is intrinsically tied to wealth preservation. According to the framework, this perfectly explains the Indian market's historical resilience and its really deep cultural affinity for physical commodities, like gold. Plus, Venus is positioned alongside Mars in a way that suggests the Indian economy is incredibly sensitive to foreign institutional investments and global geopolitical volatility. So the entire baseline character of the market is built on these foundational planetary placements.
Section 2. Mapping planets to sectors.
Okay, so how do we take national horoscopes and turn them into actionable stock market data? This sector rotation matrix illustrates it brilliantly. In this theoretical model, the 9 celestial bodies, the Navagrahas, basically act as the CEOs of specific industries. Take Mercury, for example. It's the planet of commerce and communication. If Mercury is afflicted or mathematically weak, the framework signals that capital is going to flow right out of the IT and banking sectors. On the flip side, Mars represents raw energy, aggression, and engineering. When Mars is looking strong, the model demands an overweight position in defense, real estate, and infrastructure. Every single shift in capital allocation is theoretically tied to the dignities of these planets.
But here's the thing. The planets don't just act alone. They move through the zodiac signs, and these signs act as energetic filters that dictate market velocity. Think of fire signs as the market's accelerator pedal. They create really fast, aggressive price action, sudden breakouts, and super high volatility. Earth signs, however, act like the brakes. They ground the market in slow, stable accumulation and low volatility trend continuation. So knowing which sign a major planet is transiting tells an analyst exactly whether they should be bracing for a sudden, violent spike or settling in for a slow, grinding trend.
Section 3. Micro-timing, moons, and retrogrades.
Before we jump into those massive macro predictions for 2026 to 2028, we really need to look at the micro-timing mechanisms. These are the tools intraday and swing traders theoretically use to spot short-term anomalies. The source text actually cites empirical behavioral finance research that highlights a statistical anomaly linked directly to lunar phases. The data suggests that stock market returns cluster symmetrically around these phases. The new moon creates a psychological environment of calm optimism and institutional accumulation. That means steady, upward price action. The full moon, though? Well, it statistically correlates with retail anxiety, emotional volatility, and irrational panic selling. So the tactical strategy here is to accumulate stocks in the days right after a full moon to exploit that psychological momentum shift as the market drifts back toward optimism.
And then, of course, we have the infamous Mercury Retrograde. Since Mercury governs commerce, digital communications, and banking, its retrograde periods are notoriously associated with technical glitches, totally erratic trading volumes, and false breakouts. I mean, we all joke about Mercury Retrograde being the reason our emails won't send, right? But in this framework, it's literally the reason a technical breakout completely fails. The cardinal rule here is absolute. Strictly avoid initiating massive new positions in tech or financial services during these specific windows in 2026 and 2027. The directional ambiguity is just way too high, and those initial price breakouts are basically guaranteed to fail.
Section 4, Phase 1, Jupiter's Euphoria.
All right, let's get into the chronological macro forecast. Phase 1 kicks off mid-2026 and is characterized by sheer, unadulterated optimism. The primary catalyst? Jupiter, the planet of wealth and corporate expansion, entering its exaltation in the sign of Cancer. Basically, Jupiter is operating at its absolute maximum capacity for boundless growth. But what makes this highly unusual is Jupiter's atachari, or accelerated motion. This rapid movement causes intense oscillations that will trigger massive institutional liquidity injections and severe credit expansion. The playbook says you want to overweight banking, financial services, and real estate here. But there is a big catch. This rapid speed is going to create severe market froth. Investors absolutely must stay vigilant and take profits before that irrational exuberance peaks.
Section 5, Phase 2, the Karmic Shift. But as you might expect, the euphoria of Phase 1 doesn't last forever. By late 2026, the market narrative violently pivots as we enter Phase 2. This phase is driven by a massive shift in the lunar nodes. Rahu enters Capricorn and Ketu enters Cancer. Rahu acts as this really aggressive magnifier of ambition and technology, while Capricorn represents heavy industry. When you combine them, it creates an obsessive drive for structural dominance, igniting a massive capital expenditure or CapEx supercycle. We're talking capital aggressively rotating into heavy engineering, defense, and artificial intelligence. Conversely, Ketu brings the sense of detachment and actively suppresses the desire for domestic consumption. So you'll want to heavily underweight FMCG and traditional retail, as capital just flees those defensive staples.
Now, layered right on top of these phases are the eclipse corridors. In Astro-Economics, eclipses serve as the universe's ultimate reset buttons. They coincide with sudden policy changes or totally abrupt narrative shifts. The text actually points to a really dense alignment of eclipses between 2026 and 2028. You'll want to pay special attention to the total solar eclipse in August 2027. This eclipse perfectly overlaps with the onset of our final and, frankly, most dangerous macro phase, theoretically cementing a highly aggressive institutional flight to safety.
Section 6, Phase 3, Saturn's Great Purge. And that brings us right to Phase 3. The source material describes this as the most structurally dangerous event of the entire decade. The catalyst for this purge? The planet Saturn entering its debilitation in the highly volatile fire sign of Aries. Think about it. Saturn represents restriction, austerity, and karmic justice. Aries, on the other hand, favors unbridled, debt-fueled expansion. According to the framework, the collision of these two diametrically opposed energies acts as the ultimate macroeconomic stress test. It violently halts fast-paced economic growth and actively, ruthlessly punishes any companies that expanded way too quickly utilizing high-interest debt.
Because of this, the resulting survival playbook for 2027 and 2028 is entirely defensive. The framework dictates a strong overweight position in gold and silver, projecting a massive precious metals supercycle as all faith in speculative paper assets is basically destroyed. Furthermore, as the broader economy faces crushing austerity, companies specializing in distressed asset management, debt restructuring, and essential healthcare are predicted to see massive capital inflows. At the exact same time, high beta tech and those over-leveraged NBFCs are marked as highly vulnerable to sudden market corrections or even outright bankruptcy.
Finally, the text introduces a really incredible capstone microfilter called the Sarvatobhadra Chakra, or SBC. This thing is a wildly complex 81-box grid. The core concept here is that sophisticated astro traders map the phonetic vibration of a stock, specifically the very first letter of a company's name or its ticker symbol, right onto this grid. If a benefic planet, like that exalted Jupiter we talked about, casts a positive aspect, or Veda, onto that specific letter, the stock is cosmically primed for outperformance. But if a malefic planet casts a negative aspect, the stock should be avoided entirely. This allows traders to pick the absolute strongest individual equities within a sector while completely sidestepping hidden laggards.
It really is a vast, intricate, and entirely alternative way of viewing capital flow. As we approach this highly active window from 2026 to 2028, it leaves us pondering a truly fascinating question.
Can these ancient frameworks of planetary mechanics accurately map onto the lightning-fast, algorithmic markets of the modern era? Well, the theoretical architecture presented here certainly suggests they can. Thank you so much for joining me for this explainer. It's been absolutely incredible unpacking the intersection of high finance and celestial theory with you, and I really hope it leaves you with a completely new lens through which to view market cycles going forward.